Good morning, people, and welcome. Wow, what a interesting last couple of days that we have been having. The Dow now is actually at new lows. I'll get to that in a second, but at the moment, oil way up. I think oil went up to a record high of $142 or something. Might have even gone a bit higher, but just incredible the way that that's trading. Every time someone's calling, short oil, it's going to come down, it continues up. And I've been sort of saying that, $180, $200 a barrel is definitely on the cards. And your gold has actually come up again too. Gold is now trading at $930 an ounce. And you can definitely tell there's more money going into gold as people are now hedging against the market. Now the Dow is sitting on new lows. There'll be lots of new money flooding into gold. Okay, what we have here is the chart of the Dow Jones. The Dow actually closed last night at 11,346 points, down 106 points. If you remember yesterday, it actually closed at 358 points down. So the interesting thing with the Dow now is, I know a lot of media are reporting a bear market. We're already in a bear market, but something that actually now has signified and confirmed that is because of this reason. You'll see here in December, you see that big downtrend there. And remember, we had that big couple of days back in January, and we had a low down around about I think it was about the 20th of January. And now if you draw a straight line across there, the Dow has actually now broken that major support line. So it'll be very interesting to see what happens to the Dow in the next week or two. You'll probably see the Dow come down a little bit and then bounce again, but it'll be very interesting to see here on in what the Dow actually does. Now, there is a lot of people out there asking a few questions, but I know that there's a lot of people that find it hard about the lies and the deception from the media, but it's quite funny because this morning, one of the websites that I check is cnbc.com, and it's very funny. I mean, if you're a person like myself and you trade a lot and you don't really listen to the media, then you switch back and you go and have a look at what they're saying. It's quite funny. I had a chuckle at this morning. And these headlines actually come out, I'd probably say after the market closed, but you'll see up here, like I said, we're at the front page of CNBC, and there's a headline up the top here that says, "Stocks near bear market, but there's no panic yet." That for me is an absolute classic. Basically, it's saying that stocks might be in a bear market and there's no people panicking. Come on, like we've had 2 days where the market's gone down nearly 500 points and they're calling it, it's not a panic, it's just a little bit of a hiccup. I mean, 500 points on the Dow in 2 days, it's pretty significant. And we're something like at a new 21-month low on the Dow. So it's just interesting to see what the media put out there and how people interpret the news. And even if you come down here and have a look at some of the headlines here, I'll read them out to you just quickly. Merrill may unload stake in BlackRock to raise capital. More write-downs for Merrill. Credit card debt snaring more high-income people. Oil record above $140. Weakening dollar. Blah blah blah. There's all this sort of stuff here. Credit crunch is creeping back. Here's why. Blah blah blah. So CNN or CNBC's critical or hypocritical views of everything that's happening, you can just tell that there is something actually going on behind the scenes to sort of make you think, oh well, okay, things behind the scenes aren't really as bad as everyone is thinking. Now, just for a minute, I would like to touch on a very important point. And basically, it's to do with a lot of the consumers, not just in America, globally, and some of the big banks and the credit card companies. And after many years of explosive growth in consumer debt, financial companies are now reducing the credit limits on their cards held by millions of people, and they're doing this often without warning. You've probably seen this, or you've probably heard friends or whatever. It could even be yourself that cards like Visa and Mastercard, as well the American Express, they're actually cutting limits for customers who have run up big debts, or they live in areas which have been hit hard by housing crisis or other troubled industries. And it's basically because of the reductions to consumers squeezed by some of the hardships of the economy at the moment, and the weak housing market, rising unemployment, and basically people falling behind on their monthly credit card payments in growing numbers. And I have touched on this in previous talks where many Americans and consumers actually rely too much on credit cards for everyday living expenses like your groceries, gasoline, medical bills. And people that have been relying too much on this are now probably going to become seriously in trouble. There was a lady, Pamela, who actually emailed me about 3 or 4 days ago, and she's saying, I'm already feeling the pinch. I'm a family therapist. We're on a stable together. Me and my hubby are on a stable six-figure income. And get this, she went to like a garden flower. All she wanted to do, this is I think back in April, all she wanted to do was on her credit card try to buy a $30 worth of flowers with an American Express card, and her transaction was denied. And she said that even though she rarely misses her payment or her paybacks to the credit card, she just made one for $1,000, her credit card was still actually denied. And Pamela said, even though that her credit card has been paid off and it's fully okay, because it's with the credit card company she's with, she said that it was actually her limit was actually lowered to about $900 from $2,300, and the flowers that she bought had pushed her just over the new cap. And this lady was a bit distressed because she's sort of saying, she's had a lot of credit cards over the years, and this has never actually happened before. Now it's happened twice in the last couple of months. Now the main thing here is, okay, the banks are in trouble and they're in huge amounts of debt and that sort of thing, but now they're actually trying to hit the consumer and trying not to increase their risk by hurting the consumer. And as cardholders keep falling behind on their bills month after month, well, it's only just going to make the banks even more in trouble. So even though the government and the Fed are still trying to save them, they won't be able to do it in the end. So you will see a lot of these people saying, I'm just going to get my credit card and I'm going to blow $20,000 on something. Well, I mean, that's a good idea. And if the credit card company you're with goes belly up, well, will you have to pay that money back? Well, don't think that's the issue, because in the short term what they can do is limit your expenditure and your maximum expenditure on your credit card. So will you even be able to do that in the first place? The banks have realized, for the last 2 or 3 years it was like, we're giving you more credit and more credit with that credit, and now in the last 2 or 3 months it's been the exact opposite. And the credit card companies and all the banks, they're basically just reporting the debt and the troubles that they are facing on the surface. Imagine all the debt and the credit has gone through there in, say, the last 6 months, which they don't have to report that for another 6 to 12 months down the track. Anyway, it's my take on things. Keep watching that market. It's very interesting. We're in new levels now, so it'll be interesting to see how this all plays out from here on in. Thank you again for watching. Please add your comments below and remember to subscribe on the right hand side. Look forward to listening to your comments. Enjoy your day, and I'll talk to you all very soon. Bye.